All right, Robert, another one of our witty startups. Do you know what is shining even more brighter than the Northern Lights in your background?
The performance of the Remax Hallmark top 10. I don't know what.
Well, that too, but we will find out on this episode of Real Estate Chat with
Jonder Perez.
and Robert Eid. This episode stems from not only Robert's charts and analysis into mid-May or approaching mid-May, but also the fact that inventory seems to be lighting up a bit more. Robert, did you notice a bit more houses than usual getting listed all of a sudden?
Yes, there are. And there's more terminate, all that stuff. But I looked at it and made a comparison. It's about the same as we had last October. And it's 30, 40% more than we had at the beginning of March. So you can attribute it to a number of different things, but there's a lag that's being caught up now.
Well, we're going to look at that on this episode, and let's share the screen here with Robert's chart, starting with predicted sales. So as of today, what date is it? May 10 today when we're recording this. You may see this a day or two after we record this, but what is May shaping up to be, Robert?
It's shaping up to be dull, the 23rd best May. Last year, we had the 14th best May. And so that made us think that something was continuing from the spring rally. But now I think we don't think it's continuing the spring rally. Still not spectacular numbers compared to, I call it just the 4 year now because I'm not using 2020. The number's too low. And the 10 year, 30% off that, half of a boom, and half of the max, and 24% off of pretty good month. So it's the same as we've been seeing for 2 years. We're scuttling along the bottom of this chart, which only has the top 5 or 6 years compared to the average. So the fact that we're seeing, just like last month, 7,000 sales, 7,000 sellers, 7,000 buyers, means that things are not terrible. It's not 2,000. It's not like we see on here 4,600 and 2,900 in a terrible lockdown. But it's not, 12,000 that we saw in the second best May ever. So what we see on the next one, which you get to, we'll see that inventory is building up since they're not being gobbled up at the same rate. And it's the time for the daffodils and the time for the gardens and the time for grandma and grandma to put their house up for sale because now it shows off their wonderful garden to best advantage. We see that inventory is creeping up. So we're creeping up dangerously close to 20,000, 18.9. I did it again this morning, and on Stratus, it's closer to 20,000, and on Realm, it's over 20,000. So this is significant only if you're comparing it to the most recent years where we've had a boom. Last 5 years was more boom than unboom, and the last 10 years was more boom than unboom, where the average was, 17, 23, 33% less. If you look at the long haul of a bunch of averages and a bunch of bads and a bunch of goods, 18.8 is about normal, so we're only 2 points off that. So everybody remembers what it was like 5 minutes ago, not what it was like 50 years ago. And that's what we're comparing it to. This inventory is up, but maybe that's healthy. If it was too much of a seller's market, then maybe that will give a few buyers a chance to do some negotiating rather than just pay or go away.
Well, we seem to be going in this back and forth range. And I remember several episodes ago of Real Estate Chat, make sure you click like and you click subscribe so you're always in tune with the real estate market. We were talking about this upward trajectory, and all of a sudden, naturally, the spring market deflates some of that inventory, not only because of, I mean, when you're looking at inventory levels, you're looking at what's being introduced and then what's being sold. And then what's remaining, of course, is the active inventory that's not been sold. Robert, we've been talking about interest rate cuts, the anticipation of such, the first one should be right around the corner. Now, there may not be a chance of that happening right away. Still, it's going to happen by the end of the year. Naysayers are saying it's not going to happen. In fact, there might be more rate hikes. Is this a sign of buyers sitting on the fence, not wanting to enter, but sellers are saying, hey, you know what? Let's just put our listing on the market and see if we'll get any takers for this. But now we're seeing sellers in herd mentality anticipating such announcement to happen, but the buyers are not there yet. Is that the right way to read this?
It's impossible to read it right. We've had 7 reporting days in May, and so we're guessing about what's going to happen. By the end of June, we'll know whether we had another failed false rally like we had last year for the same reasons, anticipating rate drops that don't come through. What we've got to remember is we have this affordability problem with its 3 corners: prices, income, and interest rates, an amortization, the amount that it costs to carry. And it looks like the thing that's the problem is what nobody wants to say out loud, that the prices are too high. Incomes aren't going up. Interest rates are going to be 3.5%, 4.5%, 5% for a 5-year term for the next 5 years on average, let's say. And so the only thing that can make things more affordable, that will pay off for everybody except for grandma and grandpa that's been sitting in their house for a long time and thought they're going to cash in at the very peak. So they're going to peak in at 90% rather than 100%. Is that so bad? The specs, they're going to have to dump and lose money, but that's just a tax write-off. So we will find out in the rest of this year whether the real estate haters were right, whether the spec haters, present company included, were right, or who's anticipating overly too much and under too much. And that's all we can find. There's
It's gonna
always
be
people who want to move, and then there's people that are trying to outsmart the trend.
it's gonna be right around the corner. So June, first week of June is the next rate announcement. I believe it's June 5, if I'm not mistaken, on the
Yeah,
Wednesday.
I think you're right. I think it's either going to, but remember, the next one is going to be a quarter, whether
Yeah.
it's in June or September, it's a quarter. Who cares?
Mm.
We're looking for 2 points.
So June.
Okay, so here's another look at supply, which we take a snapshot every day and look at it through the lens of the new MLS system called Realm, where it's broken down into a couple of different subcategories because it can't go over 10,000 in any individual search. And I look at free and condo and then compare that to what my regular thing using the strata system is. So we're dangerously close to 20,000, 19.5 and 20.1 of inventory, which is much higher than it was in an artificially fast-paced spring, and about the same as it was last October. Can we remember last October? Not too clearly. Market's changed 3 times since then.
And so how do we conclude this? Too early to tell what's gonna happen around the corner when we turn the page.
Well, we know that sales are not going to go to 10,000. They're going to stay somewhere between 7 and 8, probably closer to 7. And inventory is going to continue to mount. We may end up at 24,000, 25,000 by the end of the month with
Is
people
that
scratching their head saying, why is this? And what's normal? That's what we're trying to find out with the 10-year average. What's normal? Are there too many bad houses that got tenants in you can't show? Is it all condos that are where the accumulation is developing? Is it all in Mr. and Mississauga and far out Durham, where the new listings are all coming? And what type of property are they? And why aren't they selling? And why are people not getting their expected asking price? Or why are they getting their expected asking?
well, interesting thing you pointed out condos, because if you go back to the Trev Market report that we did a couple of episodes ago and you really break it down, there is a significant proportion of these active listings and even the new listings entering the market being condos. And in our office meetings, Robert, we're hearing from fellow hallmarkers, realtors, real estate brokers, professionals, saying that their listings are sitting on the market, no showings or very minimal showings for condos. And so when you're looking at whatever your favorite real estate app is, you are seeing in the detached freehold areas sparse number of listings. But when you're looking at the condos, you're seeing a massive, massive number. And like condos being what they are, cookie cutter, whatever you want to call them, similar layouts and all that, what's going to help your sell versus the other one sell? At the end of the day, it's going to be, well, one thing differentiator will be the price, but what happens when everybody starts dropping their prices? It'll put a negative.
Well, then it's a race to the bottom. If the investor, the junior investor spec, is selling his pre-construction. He's trying to do it before closing, but he's too afraid to blow on the deal because of the unlimited liability that he signed himself up to on the dotted line on the contract without reading it. So he's going to close and he's going to lose money. He knows he's going to lose money. What's he going to do? He's now going to either rent it to somebody who doesn't want it, but will rent it at a monthly loss to the investor price. So the investors' junior specs are selling,
Yep.
and they're selling things that aren't performing for them. So why was somebody else in that same category of small time investor take it over? They won't. They'll say, okay, you're hurting. I'm going to let you hurt a lot. And if there's 50 for sale, I'm going to pick the one where the person who's selling is hurting the most and the one that's the most advantageous, most rentable, and who's got the parking. Like for the last 10 years, they were supplying the small investor was supplying the rental market. And that's how the condo market got all skewed over to these 500, 600, 700 square foot, 2 bedroom, 2 bathroom, which you really can only rent. You can't live in it and enjoy it and say it's your home. So they were just a substitute for purpose built. Now everything's all gone over to purpose built and subsidies, and everybody thinks they're going to solve the affordability problem by building these more 700 square foot, 2 bedroom, 2 bathroom that rent for $2,500 and more. So it's a mess.
There you go. It could be some buying opportunities if you're brave enough to, within your budget, and of course, if this is what you're intending to do, not spec buying or
No, just
irresponsible
look at the
buying.
days on the market. How long has this property been on the market? And make an ugly offer.
That's it.
That's what you got to do. Make an ugly offer. And if the guy doesn't take it, who cares?
Make sure you put into the comments what you think about the current market, what you're currently feeling, if you're a fellow real estate professional, or if you are a buyer, seller, investor, real estate hater, doesn't matter. Put into the comments what you think, and well, get it into the chat of our real estate chat community. Thanks for watching this episode. Stay tuned, take care, and bye for now.
See ya.